All right, so Bitcoin is at a huge crossroads. As we head into December, the market is really getting ready for a big move. But which way is it going to go? In this explainer, we're going to break down the powerful forces that could either send Bitcoin soaring or trigger a pretty steep decline.
So the big question on everyone's mind is simple. Is December going to be a month of rally or ruin for Bitcoin? We've got all these conflicting signals setting the stage for a major showdown between the bulls and the bears.
And this all comes after a really brutal November, where that seasonal strength everyone was hoping for just completely disappeared. It's left the market feeling kind of adrift, just looking for a new direction.
And I mean, how rough was it? Bitcoin plummeted over 17% last month. That is a sharp reversal of the typical November trend, and it has traders totally on edge about what's coming next.
So what we have now is this classic tug of war. On one side, you have these technical indicators pointing towards a massive surge, but on the other, you've got some seriously concerning fundamental data and on-chain metrics. Let's break down each side, and we'll start with the bulls.
Okay, so what's the argument for a major price rally? Well, despite all the recent weakness, some analysts see a very clear path higher.
In fact, analysts like KillaXBT are pointing to a very specific target, that zone between $95,000 and $96,000. They're arguing that there's a powerful technical setup acting like a magnet, just pulling the price up.
And that force, it has a name: liquidation clusters. Now, this is a technical concept, I know, but it is absolutely central to the whole bullish argument right now.
So, what in the world are these clusters? Think of them like a row of financial dominoes, just waiting to be tipped over. They're zones just packed with leveraged bets. If the price hits that first domino in the zone, it sets off this cascade of forced buying or selling. This whole rush creates a kind of gravity well of liquidity that just naturally pulls the price towards it.
But here's the thing. Getting up to that $96,000 target probably isn't going to be a straight line up. The analyst actually outlines two potential paths. Maybe a small dip before the rip, or a sharp surge followed by a shakeout before the final climb. Either way, you can expect some serious volatility.
All right, but for every bull, there's always a bear, right? And the case for a price drop is, well, just as compelling. And it's rooted in some very real and very large numbers.
First up, let's talk about the big money, the institutions. In November, get this, nearly $3.5 billion flowed out of Bitcoin spot ETFs. That's a huge sign that the big money was heading for the exits, not looking to buy the dip.
And on top of that institutional selling pressure, here comes a flood of new supply. In December, nearly $1.8 billion worth of various altcoins are scheduled to be unlocked and just released.
And we're not talking about small projects here. We're talking about major players like Sui, Aster, Layer 0, and Arbitrum, all releasing tens of millions of dollars in tokens. And historically, a lot of these unlocked tokens get sold almost immediately, which adds immense selling pressure to the entire market.
And, it's not just institutional flows or altcoin unlocks. The on-chain data for Bitcoin itself is flashing some pretty big warning signs. Specifically, the biggest players, the whales, they look like they're moving their coins into a position to sell. Just take a look at the exchange whale ratio. This metric tracks how much of the Bitcoin flowing into exchanges is coming from the top 10 largest wallets. And wow, it has nearly doubled recently. This tells us it's the whales, not the small retail investors, who are moving their coins into position, likely getting ready to sell.
And to pour a little more fuel on that fire, even the most dedicated investors, the long-term holders, have been consistently selling for over 6 months now. You just don't see a durable market bottom form when both the whales and the long-term holders are cashing out. So you've got this intense battle, right? Bullish targets way up high, bearish data pulling things down low. It really all boils down to a few key price levels. These are the lines in the sand that could decide the outcome.
According to the popular trader Don Alt, it all comes down to one massive resistance level, $93,000. He calls it, and I quote, the single line that decides whether BTC keeps the bull bias or slips into a deeper corrective leg. That's how important it is.
So here's the bottom line. We have these key battlegrounds. Looking down, a break below 84,500 and especially 80,400 would be really bearish. But on the upside, if we can reclaim that critical zone between 93 and 97,000, well, that basically erases the bear case and opens the door for a pushback towards 100,000.
All right, so where does all this leave us as December kicks off? The market is tense. You can just feel it. and the prevailing mood is definitely one of caution. A lot of people are just waiting and seeing.
You know, this quote from TerraHash co-founder Hunter Rogers really nails it. He says, "This still feels like a repair phase," and that makes perfect sense. After a 17% drop, the market isn't in a confirmed trend up or down. It's just trying to find its footing after a major shock. And so the conflict is crystal clear. It's the technical pull of those liquidation clusters up at $96,000 versus the heavy weight of ETF outflows, massive token unlocks, and some really worrying behavior from Bitcoin's biggest and oldest investors.
And that brings us to our final question. As Bitcoin tries to patch things up, one side has to give. Will the bearish headwinds prove to be too strong, leading to a breakdown? Or will the bulls manage to defy the odds and trigger a massive breakout? Well, December is about to give us the answer.